You know what I'm going to do? I have my dog here.
Yeah.
Although she's sleeping, well, if I close the door, it'll be better because then she won't hear if somebody's coming up in our office.
Okay.
My husband's in the OR today, so he's probably coming after OR to pick her up, but I think we'll be done by then.
So
I
what we're going to
am
be
good.
talking about today is really the lack of financial literacy and misinformation about finances in healthcare professionals.
How's my financial health, Doc? Welcome to the Financial Literacy Podcast for healthcare professionals, where financial security and wealth topics are not a taboo.
Okay, so let's get
Okay.
going then. Okay, so welcome back everyone to the How is My Financial Health Doc podcast, and I'm your host, Vuket. I have back with us a good friend, Sandy. Do you remember Sandy? So we had a podcast with Sandy before. So welcome back, Sandy Pollack. Welcome back to the show.
Thank you, Bouquet. It's a pleasure being here today.
It's the pleasure for me and for our audience for you to be here, and I do want to thank you for you taking the time to spend this few minutes. It's going to be more than a few minutes, but I'm just going to say a few minutes with us. And the topic we're going to talk about today is very dear to my heart, and I believe it's also very dear to your heart. Let's just start with that. Why is it so dear to your heart?
Well, financial literacy or financial fluency is something that is very complex, very confusing, and yet it doesn't have to be. And I think a lot of it has to do with so much misinformation on social media and other channels that when you get too much information, it becomes very complex. And there's a great book out there by a psychologist called The Paradox of Choice. And when you have more than three, or I think maximum of five choices, you're never really sure that you made the right decision. And I think that this is precisely what happens in the world of financial planning, saving, investing, risk management when it comes to professionals. And I think, quite frankly, for all North Americans, and I'm talking about Canada and the United States combined. And it's dear to my heart because I believe that it doesn't have to be.
Yeah, thank you. Now, you shared with us on the last episode that your husband is also a physician. So you probably see this firsthand, how healthcare professionals deal with financial literacy. So tell us a little bit about, your personal experience and your professional experience with healthcare professionals in the realm of finance. What have you noticed and what have you recognized?
The first thing that I recognize is that in medical school, they do not teach financial fluency. They do not teach financial planning, how to set up a practice if that's the case, how to manage money, how to set aside money for taxes. It's really a process when you're in med school, and this is again according to clients as well as my spouse, it's about survival. It is very arduous, very time demanding, very physically demanding too, because sometimes you don't get enough sleep, depending on if you are in an internship or residency. And I think that what happens is when they graduate med school, and the majority today are graduating with a significant amount of debt, they do not know how to manage it. And they sometimes are surprised by how big that debt load is. Because as soon as you go to a financial institution and you tell them that you're a doctor, they are throwing lines of credit at you and not really guiding you on what is wise to use in terms of spending, needs versus wants. And so you can end up graduating from medicine with a very significant debt load, and yet you still want to eat and enjoy life.
Well, yeah, I mean, you bring up a really good concept, the difference between want and need. And I learned that the hard way because I didn't even know the difference before that. So I thought everything was a need, which is not. There's some things are a want. So I had to learn what's a want and what's a need. And to your point as well, when I went into med school, a lot of banks wanted to be my friend. And when I first year of med school, I purchased disability insurance because someone was preying on me already. And I didn't know anything. I thought I needed it because they told me I needed it, so I purchased it. And at the same time, there's all these banks and all these companies that come and want me to open a whole bunch of bank accounts and credit card, which I'm like, oh, fabulous. I need a credit card. It's good that you give me one. So I opened up credit cards and without really knowing how credit cards really work. I was a young 17, 18 years old when I got into med school. So I knew nothing about the world. And so that's how I got hooked. And to your point that they don't teach us this in med school, even though they allow all these financial institutions to come and get exposed to us.
And it can be very daunting because there is, someone once said to me that there are four freedoms: freedom of time, freedom of money, freedom of relationship, and freedom of purpose. And I think for physicians in particular, their challenge is freedom of time and
Mhm.
freedom of money, because their time is so demanding. I mean, I have a few of my clients that are physicians that tell me, Sandy, I didn't sign up for working a 50 or 60-hour week and then coming home and having to do paperwork or having to fill out forms and having to go back online to complete all these things. And they're exhausted. And then realizing as well that their fees have declined when you think of inflation and the impact of inflation over the last 10 years, where the people that they hire, particularly if they're working independently, salaries, pensions, benefits, all those things have escalated. So they're finding that the wiggle room that they used to have perhaps 25, 30 years ago does not exist today. And going into medicine, people that do go into medicine are going into it 90% of the time, not for money. They feel that they have, they're entering the labor force a lot later than most people. So they do not have any buildup of pension or RSPs. They are looking for fulfillment, purpose in what they do. And yet it can be very stressful on your health, on your relationships, hence the purpose for making sure that you have the correct risk products, like disability insurance, like life insurance. But before it is shoved at you and to a point where you feel guilty, it needs to be communicated to physicians that this is just part of a sound financial plan. And it really is the basis. Because if you enter the labor force after med school and you're in your late 20s, early 30s, and you get sick, that whole investment that you made of time and money, if you don't have continuity of income because you are sick and unable to work, then you have lost all opportunity to yourself, to your family, to your loved ones. And it could be a huge disaster.
Absolutely. I've seen it firsthand many years ago. As you know, I'm in Emerge Doc, and people know that I'm in Emerge Doc. And many years ago, we had a colleague who was just finishing her residency. And she was supposed to come and work with us, start her brand new career in our emergency department. And before she even started, unfortunately, she found out that she had brain tumor and unfortunately passed away even before she started her career. And to what you just said there, all that investment by herself, by her family, all the sweat, all the effort, all the money put into her education, all just vanished like that. Now, obviously, we lost a person, we lost a colleague, we lost a human being, but also all that financial loss to the family is catastrophic.
Yeah, and I don't know, quite frankly, Phuket, what is the right way or when is the right time to introduce this? Because the first year of med school, you're totally, it's like a tsunami. right? So you're just trying to get through that first year, and there's so much to learn. It's like trying to eat an elephant.
Hmm.
And then you get into the second and third year, and then by your fourth year, you're saying, well, what do I want to specialize? Do I want to go into family medicine? Do I want to do 5 years in another specialty? These are all decisions. So there's so much time that is expended on figuring out how to get through the day as well as plan your future, that there's very little time allotted to really looking at the financial aspect of the career of a physician.
And you're right. I mean, the career of a physician is the next 30, 40 years of a physician. The med school is 4 years, the residency, okay, 5 years. Some people drag it on for another 5 years because they do PhD upon PhD. Okay, let's call it 20 years, right? But the rest of your career is potentially 35 years. And med school prepares us for the first 20 something years and doesn't prepare us for the next 30, 35 years. And to your question is, where do they do it? The curriculum is so packed already, but it is an important aspect of our career because in my mind, and I don't know if you would agree with me as a financial planner, is in my mind, one of the most effective way, and in fact, I think the only first step to preventing and combating burnout is to be able to manage your time. And to manage your time is really being able to purchase back your time, which needs proper financial literacy. And I think that proper financial literacy is really the first step to preventing burnout for the next 30, 40 years. What are your thoughts on that?
I would say that it's financial literacy and it's a little bit beyond that. I call it financial fluency because there's 4 aspects of any sound financial plan. The first step is risk. You want to make sure that your risks are taken care of. What do I mean by risks? If you get sick, where will the continuity of income come from? Usually that's disability insurance. If you get sick short term with a cancer, stroke, heart attack, we call that more like the airbags, in life, where it's sudden, it's short, but it can severely impact you financially. That's where critical illness protection can come in. Life insurance is making sure that the ones that you love or the debt that you created is paid off, and that your family, if you do happen to walk out a little too soon, that you've got that financial security. So risk is one. The second one is investments. And investments, there's registered investments, there's non-registered investments. What's the right thing? It also has to do with debt elimination. When you think about investments, people are investing, but is it the right time, or should I look at how do I tackle debt and how do I do that in harmony? So you've got risk, you've got investment, then you've got legal. Right now, a lot of physicians are opening up their own professional medicine corporations. When is the right time to open up a corporation? Is it like right away when I'm out of med school? Do I wait a year or two? There's so many factors depending on what your specialty is, what your income is, and what the load of your debt is. And then the fourth one is legal. And legal is, do I have a will? Do I have a power of attorney? Have I set up my corporation appropriately with the right shareholders? The tax laws keep moving. It used to be they changed every few years. It seems like they're changing every year. And so looking at risk, investment, legal, and tax is a level of financial fluency where maybe you need a guide, and that guide should be your financial advisor who asks you not the numbers questions, but the more qualitative aspects of planning. And once those qualitative aspects of planning are dealt with, the quantitative stuff is easy. And you're probably going to ask me, Vuket, what do I mean? So qualitative is what's important to you and why. What's your money journey? What do you think about money and wealth? How was it growing up? Did you have money? Did you not have money? And once you understand your relationship with money, then you can start on chapter 2 of financial fluency. Because if you don't know what your relationship is, how can you even make a decision with clarity or confidence when you're not even sure what money is and what it means to you and why?
That's perfect. That's perfect. It's actually a perfect segue into one of my questions is, you know, you having worked 30 something odd years with healthcare professionals and with your husband, what are the most common things that you've seen among healthcare professionals that, you know what, I need to help them with XYZ? What are those XYZ that you commonly see?
First of all, they haven't, there's such confusion that they just want to unpack the questions that they have, right? And we do an audit of what they have, what they want, and try to fill in any gaps. So the first thing is they realize that they have only one. I had one client say this to me and I loved it. He says, Sandy, I have one fiddle. That's it for my income. And one bow, one fiddle. And if it breaks, I've got nothing. I'm bankrupt. So let's make sure that I have the correct amount of disability insurance and critical illness insurance so that if I'm unable to earn an income, that it's taken care of. And where I see the surprises, the premiums, people cannot believe I'm paying this much for $5,000 or $6,000 a month. And I say, well, it's not $6,000 a month of monthly benefit if you're disabled. It's $6,000 a month tax-free times 12 years. So that's $72,000 a year times 20 years. So we're looking at almost $3 million of insurance that you're buying for your $200 or $300 a month. Oh, I never realized that there's a potential payout of $3, $4, or $5 million, depending on what the monthly benefit is. And all of a sudden they realize that it isn't so much the premium that they should be focusing on, but it's the design of the contract and the amount of coverage that's potential to be paid out to them. So that's the first thing, is just thinking a little bit differently about benefit and cost instead of just cost. The
Right.
second thing, yeah.
Oh, sorry to interrupt.
Yep.
And that is a major problem. That as physicians and healthcare professionals, we don't think the same way. So we always think in cost. We don't think in value. And I think that's where one of the mistakes I find is.
And God is in the details, someone once said, and you have to make sure that your contract has the riders that are appropriate to your specialty.
Correct.
And again, depending on your age and your income and your health, it's your health that buys the coverage. So you want to make sure that if you have a health hiccup down the road, that you have an option on your contract that guarantees you the right to increase your protection without any medical evidence. And I will tell you, I've been in this industry for over 30 years. When I first started, there were about 10 disability insurance providers in Canada. It was fantastic. They had phenomenal contracts. You can move to the States and just change to US dollars and be covered. That company is no longer there. Then it merged with another company. That company is no longer there. And right now there's only 3 insurance providers out there that specialize in disability insurance. And each company has a little bit different nuance, not much. There's also association coverage. The challenge with association coverage is that in the beginning, it's very inexpensive, but also it's not a non-cancelable contract. If you move to the States and you're no longer a member of the association, you've lost your coverage. If the association, the insurance provider actually can cancel the coverage on the association saying, we don't want you as risks because we're paying out too many claims. This happened a number of years ago with dentists. Dentists were actually downgraded. They used to be the same category of risk as doctors, but they were having many claims on backs and burnout. And so all of a sudden they downgraded the risk, which meant that for the same amount of coverage, they would have to pay more than a physician. And there are so many things that have transpired in the industry that physicians are not aware of. And I always believe that you get the most you can while you're young and while you're healthy, because the belief that doctors treat patients and never get sick is untrue. Doctors do get sick.
No.
Doctors
I have to reveal something. Doctors are immortal.
Oh, there you go.
Okay, doctors are immortal. Or I used to say that doctors behave like teenagers. We never think it's going to happen to us.
Absolutely. Absolutely.
Right.
And it's very fascinating because you're almost, I don't know if you can hear where our office is located near a hospital, and I just heard an ambulance go by. And I will tell you a story that there was an orthopedic surgeon that was treating me for a back issue here. I'm in Ottawa, Ontario. Phenomenal guy. And about 6 months afterwards, I learned that while he was on call and on his way to the hospital and at a light, an elderly woman went reversed out of her driveway and ran him over. And he ended up getting a crushed, many different things, a very severe accident. You couldn't even see his face. The ambulance came and they couldn't understand because it just so happened that this particular physician was on call. And his pager is going off while the ambulance is taking him to the hospital. And they only realized once he got to the hospital and he was in the ER and in the operating room that it was the orthopedic surgeon that was on call.
Oh my.
And this wasn't someone he was at a light, and it
Mhm.
was a 92, I think, or 88-year-old woman that was just reversing out of her car on a street at a light on somewhat of a busy intersection or a busy road. And things happen. Things
Right.
happen. And he was out, you can imagine a surgeon. He was out for quite a while, and it was the talk of the medical community here
Yeah.
because it was tragic. And doctors are not supposed to have accidents, but they do.
Yeah.
And I think that is probably the number one. If you said of all the financial fluency and literacy, forget about savings and fees, and disability insurance is paramount. Paramount. The other insurances, if you have the proper advice, an advisor will explain to you what they're for, why they're important, the pros and the cons of each, so that you can make an informed decision. Once you've covered your risk, just like you have a car and you have car insurance and they're running to their broker for their house insurance, but nobody's thinking of the individual that makes it all go, which is the physician.
Yeah.
Then you can start talking about savings and debt and investments. And different buckets of investments do different things. And I think that if you have an advisor that can explain this to you on the back of a paper napkin or a whiteboard, you have the best advisor in the world, because it can be complex. Instead, we're bombarded with advertisements about fees, fees, fees. Well, I will tell you, because I deal with a lot of business owners, and the most successful business owners that are worth hundreds of millions of dollars say, Sandy, I don't worry about the fee. I want the result, the net result. And if the net result is stability, no volatility, a good rate of return, and somebody takes 2% and I get 8 versus someone who takes 0.5% and I get 6, who cares?
That's
It's
right.
the net result that matters. And I think that there is too much misinformation focusing on MERs, and people don't even know what an MER is, which is your management expense ratio, and focused on saving taxes when they don't even have any money. And I will attest to the fact that most physicians in their first 10 years of practice do not have an investment problem. They have an accumulation problem. How to save money.
Right.
Eventually, they get to the point where they have an investment problem, and maybe you want to look at and consider fees. But 90% of the physicians in their first 10 years of practice have to learn how to save money and reduce debt and live within their means.
So
and need a coach to guide them.
Yeah, sorry to interrupt. So would you say that would be the second most common problem you see among healthcare professionals is the obviously, spending outside of their means and not having enough savings early in their career?
I would say that even before that, it's the lack of having a plan and understanding how to balance debt, because there's good debt and there's bad debt.
Thank you
Right.
for saying that.
So good debt is you have a mortgage, but the mortgage has to be manageable within your income.
Yeah.
Right? Within your income stream. Bad debt is credit cards that are unpaid and you're paying 28% interest.
Yeah.
Bad debt is lifestyle debt. Oh, I need a break. I love that. I need a break. When I hear people say I need a break from what? You need to take some time off. That's fine. Now, what are you constrained by? You're constrained by your income. And sometimes you have to defer taking exotic vacations for a year or two, and you can still have a great vacation in Canada or in the States in order to alleviate some of this high interest debt. And if you monitor your net worth by living within your means year by year, once you hit that $1 million net worth mark, things accelerate beyond. And it's just getting to that first million that is so challenging. And when I say a million, I don't mean $1 million of investments. I say net worth. What's net worth? Net worth is everything you have less everything you owe.
Mm-hmm.
That becomes your net.
Mm-hmm.
And when you first start out of medical school, more often than not, your net worth can be negative.
Yeah. Minus 250, minus 300, right? Not uncommon.
Yes, yes. And you can actually, within 3 or 4 years, if you can sacrifice, it's like the marshmallow test. You know, when they had these children and they said, here's a marshmallow. If you wait 10 minutes, you'll get 2. If you can wait for the 10 minutes, if you can wait the 2 or 3 years, you will get 10 marshmallows, not just 2.
Right.
And I think that it can be very, and you need, you know, another part that people don't talk about in financial planning, which I do, is your life partner. Forget about numbers, forget about investments. Who you choose as a life partner can buy you financial success or buy you financial disaster.
Absolutely.
And so it's so key to have that conversation about money, about spending, about what it means, and about values. Because if you stay married, the chances of you becoming financially secure and independent for your retirement years is much higher than if you divorce. It can set you back 10 years financially. A lot of work, a lot of stress, a lot of aggravation. So I say this without judgment, but I always have young couples, particularly physicians, that come in my office, and I'll say, you want to know the best advice I can give you right now? Forget about funds and investments and equities and all that other fancy stuff. Stay married. Take some time to work on your relationship. Have those discussions about money. Understand where you came from, so that if you have some not so good money spending habits, you can support each other to redirect it on the right path to financial security and independence. And we are so busy that we rarely take the time to do that.
Yeah, you know, absolutely. And it's sometimes sad, well, not sometimes, it's always sad to see physicians working really, really hard and they're on their third marriage, let alone the second marriage, right? So if the first marriage and the second marriage sets you back 10 years, what would the third marriage set you back, right?
God only knows.
God only knows. Now, it's very important you talk about, you know, your first million net worth is important because I think it comes, and people don't realize what that meant. So what that meant is part of it is, you know, your money working for money as opposed to you working for money. And the more you have and the more time you allow, then you make the power of compounding work better for you. And so when you said that, you know, $1 million, people need to understand what that really meant. Financially, it's a few things that are very important.
I think that it's not only investments. Your net worth could be your home, and hopefully that will appreciate over time. And as that appreciates and you decrease your mortgage, so you could buy a house for, I don't know, $750,000, and over 20 years, maybe that value increases to 1.5. It's a way of forced savings. It's not liquid, but you need a place to live. You're not going to live in the park. So it could be savings as in retirement savings. It could be in your corporation, but it's all the different components, and understanding that some of those assets that comprise of your net worth are liquid and are money working for you, and some are just lifestyle assets. Like a home is a lifestyle asset. But I believe that, you know, that is a really important part of why you live. You want to live comfortably. And so live within your means, and you could always upgrade your homes later on, but just make sure that you don't get too much into debt. And if you are significantly into debt, when you do make a decision to make a major purchase, ask yourself, is this a want or a need? And I think constantly and being vigilant of those decisions is really important, because there's two groups of people, Phuket. You have those that save first, a little bit, and spend the rest. And then you have those that spend first and then save that little bit.
Yeah.
And what happens is the group the people in the second group usually have very little to save because they've
Correct.
spent it all. And I
Correct.
always find that those people in the second group always end up working for the people in the first group, because the disciplined savers just lock it away. And I just had my team for lunch in the office today, and we were talking about that. And one of them is a student getting her master's, and she said, Sandy, the number of times I ask myself, what's a need? What's a want? I have you ringing in my head. And she says her paychecks, she has one paycheck that she takes half of it and saves, and the other half is for utilities. Her second paycheck, she puts some in a spend in the future account, and she's allotting this. And I'm listening to her, I'm going, wow, this young woman is in her 20s and she's already developing what I would call healthy money habits. And to develop those habits takes discipline, but it also takes an understanding of where we came from, our relationship with money, and where we want to go. Because if we don't have financial goals, it's like having a ship without a rudder. You're just going to be in the ocean going nowhere. So you definitely have to have goals. And some of those goals can be having nice family vacations, retiring at age 60, doing something with some free time for the community, parasailing. I mean, it astounds me the number of hobbies and things that people are interested in and the great things that they want to do in the course or during the course of their lifetime. But if you don't share it and you don't have it written down, then why bother saving? Why bother even making a sacrifice when you don't even know what the sacrifice is for? Because saving just to save, if you don't have a goal connected to it, you won't want to modify some habits to make that goal a reality. And I think goal planning is integral to any sound financial plan.
I agree. I agree 100%. There's one of my episode where I start off by saying, do you ever feel like a plastic bag drifting in the wind? That is a Katy Perry song. And so I started the podcast that way because that's how I felt before I gained some financial fluency. And back to your point of want and need, we always think that everything's a want. Everything's a need when some of them is a want. And the concept that you brought up is, well, you need to understand the difference between the two, but also need to understand the concept of paying yourself first. And that's very, very important. So, is there a third major thing that you've seen over the years with physicians and financial fluency?
Procrastination.
Ah, my favorite one. Okay. Tell us more.
Later, I'll think about it. We'll do it next year. We'll do it next year. We'll start later. Okay, well, we just have to get through this and then we'll start that. And you see that a lot. And then 3 years go by so swiftly. And all of a sudden, they haven't moved the dial forward at all. And they wonder, well, what happened? I made $600,000, $700,000, $800,000 in a few years. I remember having to scurry for taxes. Actually, I should say that's the other thing. Procrastination and taxes, not being up to date in their taxes. So no one explains to a physician, particularly those that have professional medicine corporations, that when you take $1 out, part of that dollar has to go to CRA. It's not just $1 of a dividend. So if you can take $1 and put 30 cents right away and make that deposit to CRA, you won't be scrambling April or June, realizing that you've got a tax bill of $80,000, $90,000, $100,000. And you also get a schedule, and the schedule is your quarterly payment. So you're thinking, oh my God, I owe $90,000 and now I have to pay what every quarter? $18,000 a quarter? Oh my God, but don't worry, forget, you got Mr. Banker. Mr. Banker's there to help you.
Right. He's there with the line of credit just ready.
He's got your line of credit, and guess what? The line of credit's there, but it's not for free. And your interest, Phuket, is not deductible.
Oh my.
Because when you invest with CRA, Mr. or Mrs. Revenue Canada, it's not considered an investment. It's an obligation.
That's right.
So that interest, and then all of a sudden, that line of credit starts to grow and grow and grow to the point that it can paralyze you. It can paralyze you financially, emotionally, mentally, and it reverberates throughout your whole world, your day, your patients. That's a lot of stress. I want the guy that's going to operate on my heart to have a great financial situation so
Right.
that when he or she comes into that operating room, they're feeling fabulous and they're ready and they're doing their job because they love it. They have a passion of helping people and they are skilled at it. I do not want the surgeon who is got a debt to CRA, a debt to the bank, a big mortgage, kids that have to go to camp, and all they're thinking about are the bills and the stress and the aggravation. And then they've got to perform how many cases in a day? So I truly believe that if your financial health is in good shape and continues to be in from good to better to best, that the stress and aggravation that many physicians face just by working, this just takes away some of that stress so they can do what they do with I would say, confidence and without the unnecessary natterings in the back of their mind.
First of all, I want to thank you for bringing this up. This is why I started the podcast. Because I didn't start the podcast for money. In fact, I'm still paying to to host the podcast. So I didn't do it for the money. I did it because I recognize that good patient care, which we all want, we're all physicians, we all want good patient care, starts from a healthy physician. And you as a patient, you're telling me and you're telling all my listeners, hey guys, if I'm under the knife by you, you better be concentrated. You better be well because you cut that wrong artery and I'm dead, or you cut that wrong artery and I'm paralyzed. And if you cut that wrong artery because you're thinking about the installments with CRA, well, I don't deserve that, right? And so good patient care starts by you being well personally and financially. So that's why I started the podcast, because I know that good financial security and wellness will translate to good patient care. So thank you very much for saying it from the patient's perspective.
And also, I will tell you that what we try to do, we believe that we help our clients care for their financial well-being as well as they care for their clients' health.
Wonderful.
And the two are really intertwined. And at the beginning, it's very daunting. And I understand. And I think that sometimes you need to seek guidance from people that will go at the speed that you're comfortable with. So instead of throwing a whole bunch of shoulds, you should do this, you should do this, and instead of shooting all over their clients, really it's asking, what do you want? And in order to achieve this, this is the right path forward. And these are the decisions that have to be acted on for you to achieve the goals that you want for yourself, for your family, for your financial security and your financial independence. And that takes time. And a good advisor takes the time to teach you, not to tell you, but to teach you. And you have to be willing to learn and understand. And over time, you will develop, hopefully, trust with that advisor so that you can make decisions with discernment, with clarity, and with confidence.
We've talked about, the different things that you have seen. So let's flip and pivot. Based on what you've seen, what do you think the fixes are for us, for our community? Do you have a few, prescriptions for us? We're gonna be the patient now. You're the doctor. What are you recommending for us?
Well, you're asking me to give a prescription to like thousands of people that I haven't met, and I cannot do that. As my husband says to me, I can't make a diagnosis over the phone.
So what would you say if you had a magic wand and I could fix one or two problems? Again, not specific to Phuket Tran or not specific to Bob, but some general things that we can try to move forward positively. What would be one or two that you would say would probably we should try?
Okay, first of all, physicians are always told that they should not self-diagnose. So I would say number one is find a financial advisor that will guide you and help you achieve your financial security goals and financial independence goals. And look for qualities in that advisor. That would be the first step. It's like having a coach. You know, people don't win the Olympics by doing it on their own. They have a food coach, they have a strength coach, they have a speed coach, they have all these coaches, but your financial advisor is to be there for you and be your coach. So look for qualities like, do they ask you questions that are open-ended? Do they ask you, are they interested in you, your family, your well-being, and are truly interested in your goals? Do they make you think? Do they have certifications such as certified financial planner? There's so many different ones, the CLU, CHFC. You know, do they, and if they don't, do they have support in their office so that if they're new to the financial advisory world, they do have the backup and there's a team of support. So number one is choose a financial advisor that's going to continue to help you along the way. The second thing is take the time to understand your relationship with money. Think about how you grew up. Think about what money means to you, and think about some of those habits that need to be changed, and get some help from people, whether it's a partner, whether it's your advisor, so that you can modify those habits and get on the road from success to success in financial planning and financial literacy, so that you can get your affairs in order. Another thing is get a will. You know, look at the legal. If you're over the age of 18 and you have assets, get a will, because if you don't, the government will take over and make those decisions for you. And 9 times out of 10, those decisions, are not the decisions that you would have wanted, because you don't want to leave a mess for your family, hence me writing the book, Don't Leave a Mess. And secondly, it costs a lot. Governments do not provide a service for free. And what they do with any assets that you have is they put it in a money market fund earning 0% interest, and then they charge you a fee for holding that money. So you're actually, whatever little bit you have, besides being delayed in the courts and probate and everything else, especially if you don't have a will, you're best off getting a will and a power of attorney. And third, realize that when you're beginning your career as a professional, it is not about investments. It's about accumulating money. It's about reducing debt, but also within a plan and within parameters that relate to you and your goals. That would be pretty much in the big picture.
Yeah, thank you. And I think what you said earlier as well, in your first 10 years of practice, you mentioned a lot about risk mitigation and protecting the investment that you have already made. And so risk mitigation, in my mind, seems to be a fairly important one too. That's
probably number one.
Okay.
I would say. I mean, if you have listeners here that have a car or a house or a boat or anything, they have it all insured. And yet none of those things would have existed if they didn't have the ability to earn an income. It's similar to the farmer that had the goose. He comes in, the goose lays a golden egg. He runs to his insurance broker and says, oh my God, the price of gold is going up. Let's insure it. And he keeps bringing them. And then 6 months later, the goose is sick and doesn't produce any more golden eggs. So he was so worried about insuring the eggs, he forgot to insure the goose and the health of the goose. And physicians, dentists, self-employed professionals in particular are that. They are like a printing machine, as we've talked about previously, that have the ability to print out money as long as they're healthy, as long as they can practice their profession, and as long as they're being paid, which fortunately in Canada, the government pays you. Not as well as we'd like them to, but they do get paid something. And I think that it's important that you have appropriate disability insurance, critical illness, and life insurance, and then work on the other levels of your plan.
Amazing. Amazing. So I'm not that far off when I teach these type of things, because I teach exactly the way you said it. So I'm not that far off. So thank you very much for confirming that I've been on the right track.
You are most welcome, Buket.
So let's I think this is a perfect segue to end the conversation here. I think we've talked a lot about different things, and we talked about different things that we as individuals we can do to change the course. Is there anything else that, a burning message that you would like to communicate to physicians out there? Something must be said before we leave.
Here's one. Avoid chit chat in the doctor's lounge. Put on your little iPods, AirPods, whatever pods you've got, and don't worry or listen to what other people are doing. I find physicians tend to have a herd mentality. If one person is doing it, everybody's doing it. No one person is the same. You may have similarities, but your financial journey is very different and very unique to you. So ensure that when you are making a financial decision, it is based on your values and goals, not based on the banter that you hear in the doctor's lounge, not based solely on tax minimization. I've seen physicians get into huge amounts of debt because all they're worried about is tax, but they don't have any money. And make decisions with information, clarity, and ensure that they're totally related to your wants, your needs, your goals, and your values. And I think that if you do that, you are well on your way to ensuring a life of financial security, financial independence, prosperity, and most importantly, a good life with purpose.
That's a good wrap up. That's a perfect bow. So thank you very much for that.
You are most welcome. And I'll throw in a little plug for my book, Don't Leave a Mess, How to Disaster-Proof Your Family Legacy, which is a book that is geared towards people of affluence, self-employed professionals, business owners. And it truly is a very easy to read and understand guide on whatever, on wealth, on insurance, on how to choose financial advisors, just how to make your plan with intentionality and with confidence. And you can get it on Amazon or www.don'tleaveamess.ca. And I really hope that there begins a movement, Phuket, of physicians who are able to pause, take a step back, and think about what it is that they want out of their career, their life, and most importantly, why, so that they can make decisions with clarity and confidence. Thank you.
Wonderful. Thank you very much for that message. Thank you very much for writing the book and sharing that knowledge with us. Thank you a lot.
You are most welcome.
Well, thank you for listening this far to the podcast and my conversation with Sandy. Myself, I would do a little plug as well. As you guys know, I do financial coaching. I also do executive and leadership coaching. So if you are interested in any of these three services, please email me at hmfhd2020@gmail.com. I also want to take this opportunity to announce our next conference. And I know it's very early. We are only in the summer of 2024, but I really want to take this opportunity to say it quickly and early that we have our Code Green Financial Fluency Conference for healthcare professionals in February 15, 2025 in Toronto at the Old Mill Inn. We are very early. We're only in the summer of 2024, but please pencil this in your calendar for February 15, 2025 in Toronto at the Old Mill Inn. And if you have penciled it in now in your calendar, you really have no excuse not to come. So thank you very much for listening, and I hope you did enjoy this podcast.
How is My Financial Health Doc podcast is hosted by Dr. Vukit Tran. Dr. Tran is a physician with a special interest in personal financial security and wealth education. Dr. Tran does not render or offer to render personalized investment or tax advice through this financial podcast. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. Please confer with your advisor, lawyer, or accountant for specific advice.